In this short class, I'm going to talk about the terms you should know about for future classes. I'm also going to talk about the barrier to entry, what to keep one person from actually trading at all versus another person. And before we jump on into all that, I'm going to show you a real quick site. Links will be in the description for this and anything else I show, but I highly suggest that you bookmark the following site. And as far as this goes, it is a stock market simulator. The following site, it basically reads the stock market real time. You can set up the actual limitations and stuff of this nature, and you can set up how much you would actually fund the actual profile. This is fairly important. Treat it as realistic as possible. If you realistically are okay with putting, say, $500 down, then good, put $500. But if you're willing to put more, great. Put less, then great. But if the most you're able to put down comfortably is $500, and you go ahead and put, like, say, $1,000, $10,000, and whatever, while it will fluff the numbers, the problem is you're not getting as realistic as possible. And this means that you don't know if you're actually going to be successful or not. You're probably going to get an idea, but this, if you cannot make it into one of these simulators, then I would not advise you to put real money down in the real world yet, until you get a comfortability with how much you're returning. The thing to note is this is not the only simulator out there. Go ahead on Google and look up stock market simulators. And I'm also going to show you in a later video when we get into TD Ameritrade's Thinkorswim tools. I'm also going to show you some simulators that they have, and it's, in my opinion, a lot better on one hand, but on the other hand, these are a little bit more gamified, so it allows you to come back to it. And plus, there's in some of these websites, they actually have contests and stuff like that. So if you are able to make a X amount of money with their virtual money over a period of time, then you can be placed in a contest and you can get actual real money out of that. That's one thing to note with these sites. But these are actually used by high-end schools, high-end universities like Penn State, Harvard, and many other places, without actually spending real money. It's that way their students can actually go into one of these and put in the limitations, put in how much the fake money will be, and they can trade on these type of platforms without actually spending real money and actually having real risk. The thing to note is in life, and specifically in this, you only have real two resources in your life, and one is time and the other is money. While we can't do anything about the time, this will protect your money at least. So if anything, I want you to make a profile in this at the same time as we go through the things. I'm going to tell you some questions, what to ask brokerage firms and stuff of this nature, so you don't even have to spend a dime in most cases while you're playing around with something like this. But I want you to, as a student of these courses, I want you to go through one of these simulators. It doesn't matter if it's this site or some other site. I want you to go through one of these simulators. And simply, if you're able to make more money than you're losing, then great. You're probably ready for it. But if you're losing more money than you're making, then I would say keep at it and try to study the charts more, ask questions, get involved with brokerage communities. A lot of stuff brokers, they actually try to give back. They try to teach others. They try to help out as much as possible. Talk about their techniques and stuff like that. It's very much of a social atmosphere. It's not these old gray beards that many TV shows and movies try to make it out to be. It's people my age, people even younger than me, and of course older than me. But with that one in mind, this is something that is worthwhile to look into, and I suggest bookmarking it right now. So, in every state, and this is for the barrier to entry, in every state in the United States, there is a minimum age where you can buy and sell securities being stock and stock market. In the United States, many areas just require a person to be 18 years old, but there is some states in the 21 year of age area. It's best to check with the firms that you're going to actually open up an account with on the age requirement for your area. They will obviously know it quite well. But there is a way around this. And so, say for example, if you're 16 or whatever age, or maybe your kid wants to get into the stock market and you just want to allow them to play around with it, giving they're successful into some simulator or you're successful in some simulators, there is ways around it, but you need to note the legality of this one way or another. So with this, you can get what's called a custodian account. This is an account that has the assets in the minor's name or the one person's name, but the minor's parents or legal guardians actually are the administrators of the account. And the only person that is allowed to place orders for the account are those who are within the legal age. But the kid can legally start trading in the accounts once they reach the actual legal age in the state. And it will automatically transfer over to the kid. Now, as far as this goes, between the two options, I would say go with this if you want your kid to start trading, or you to be able to make sure that they don't mess up. I'll say that this might be a better option. But let's go into the second option. With that being said, it's very, very common to hear parents allowing their kids to trade for them on their account or in a custodial account. But unlike what you might see on TV, trading stocks normally is purely online. And this means that you don't have to call up someone, write some papers, or be there in person at all, or etc. The benefit to this is you can be practically anywhere. But for the parents and kids, this means no one actually knows who is putting up the orders. So the parent can give, and I'm not telling you to do this, but I'm telling you this is actually what does happen. So the parent can give the kid $1,000 in the account and let them run with it, and no questions are normally asked from the firm or anyone else, unless some complaint is lodged, which really doesn't happen at all. I mean, there's no reason for it to happen. It's common to hear this happening if you just type in Google something around kid makes money from the stock market, or parent teaching a kid stock market or something like that. Or if you listen to coworkers at work, you'll find this happens quite a bit. But if you look it up online, you'll find articles from CNN even celebrating, saying a parent teaches their kid how to make some money on the stock market, or some high school kid making almost $500,000 in the stock market. Even in, again, workplaces or other places, you might hear parents bragging about their kids doing great in the stock market, and their kid some cases literally is 10, 12 years old. So that's something that should alert you right there that it is fairly common. Now, while I'm not telling you to do this at all, and I'm pretty much going to expressly say do not break the law, it is important to note what I said before about this being very, very common, and trading happens almost all online today. So again, there's no verification type there. But again, it's just important to note that this does happen. And there is also a notation of conflict of interest for narrow barrier entry, which exists when someone who can influence stock prices, who trades on that stock. The best example this can be is, say for example, you got someone major on TV, and the analysts, because of their position and influence and whatnot, they can actually influence the stock for the good or bad. As a result, many publications have regulations and stuff like this into their reporters, their hosts, and stuff of this nature. So it's fairly important to note this if there is any conflict of interest for maybe you're a public figure or what it may be. Another obstacle to the stock trading is insider trading. Most people know what this is, but this is fairly important to cover. But it's insider trading, or trading by people who have inside information about the company that can impact the stock of the company. For example, and keep in mind, many employees trade their company's stock. So keep in mind with this. For example, if you work for some company, say company X, and you know they were coming out with some revolutionary product or something like that blows all over other competition out of water, or you think it might, and you can't go to the market, go and buy a whole bunch of shares and then and just walk away. Same thing goes if you know a company is going to be doing massive layoffs, and it looks pretty bad as far as their quarterly earnings. You can't go and short a bunch of stocks in that company. That's part of the insider trader. And the punishment for that is very stiff fines. It's jail time up to 20 years in prison, and or up to a fine of $5 million. The key here is avoiding taking advantage of non-public information. Basically, if the public knows about it, great. If the public doesn't know about it, then there's problems. So for example, if you work for, say, company X, and on a Wikipedia page it talks about it, and it's all public, even though not a lot of the public knows about it, just it being out there in the public, and the public is able to research it and do whatever, great. But if it's nowhere near being public, then that's problems and stuff. Like quarterly earnings before they are released, they're not public knowledge, so therefore you can't short or long stocks depending on what the reports say. Now, does that mean a employee of a company can't ever actually trade for the company itself? The answer to this is no. The company, again, employees trade company stock all the time, especially those who have stock options and stuff of this nature. There just can't be an unfair advantage due to non-public material that will have a reasonable impact to stock value, nor can there be a breach of trust. So, for example, if this is a broker telling a client one thing and doing the opposite with their own private funds. So, for example, if a broker comes up to you, and your broker or whatever it may be, if you ever get to the point of having one, which the class is kind of pointing not to do that, but if you do at some point and they say, oh, I think you need to go ahead and put a bunch of money into this given stock, and then they go around and short it themselves, that's illegal. So that's not. Now, the barrier of those restrictions are virtually anyone of any age can buy and sell stocks in the United States. And with that in mind, you just got to make sure they basically meet the age requirements, and it's good to go. Note that there's no age, there's no requirement that you got to be in New York. There's no requirement that you got to wear a suit and tie every day. There's a lot of people who dress like me and who trade stocks and makes a lot of money off of it. The fact is most people that you know, they might trade stocks. The fact is anyone basically can. You just got to have enough there to do it. You got to be able to be smart about this, and you got to have a brokerage account, which I'll show you how to do in one of the next videos. Below I have a link to a great site, and I highly suggest that you bookmark this one, or at least have it in the back of your mind that's there. And as far as the site goes, it is known as a investment dictionary. You're probably going to run across a lot of lingo that you're not familiar with, so that's something to keep in mind, especially when new things come out. You might have been hearing lately on spider ETFs and stuff like that. The fact is not knowing these things is great. Just go on this site and look up. Say, for example, if I want to know what a ETF is, I can just type in ETF, and the thing will come up and it says exchange trade fund. And it'll even, some of these, they'll have the actual videos on what an ETF is and how is it different from other things. So I highly suggest they actually, if not bookmark the site, then at least have it in the back of your mind that it's there. And as far as things goes, I'm going to actually go over a few terminologies that we are going to cover in the overall course, and that way no one's left behind. So as far as that, Forex or FX is something that you might hear quite a bit, but is the market in which currencies are traded. Shorting is something that you're definitely going to hear a lot in this course, and it is when an investor plans on making money when the market goes down. Again, I'm going to cover this one in detail in a later video. Then we got longing or long, and what this is the investor makes money by the actual stock going up, and this is the traditional buy low, sell high type of mess. I'll actually go ahead and explain this in a later class. Notes that shorting a stock is meant to counterbalance the actual stock going too high, whereas longing is meant to counterbalance a stock going too low. Then we have ETFs, and what an ETF is it's a exchange trade fund, and is a marketable security that tracks an index, a commodity, bonds, or a whole bunch of assets, and like an index fund, so like the S&P 500 and stuff of this nature. I'll cover this in a later class. Notes, you might hear of stuff like iShares, Viper, or again Spider, and this goes along with the ETF, and that's why it takes an entire class into itself to understand that. Then we have things that are called mutual funds. A mutual fund is an investment vehicle made up of a pool of funds collected from many investors for the purpose of investing in securities such as stock, bonds, money markets, instruments, and similar assets. Mutual funds are operated by money managers who invest the fund's capital and attempt to produce capital gains and incomes for the fund investors. A mutual fund's portfolio is structured and maintained to match the investment objectives stated in its prospectus. Then we have hedge funds, and this is something that you might have heard in the past. Hedge funds are alternative investing used pooled fundings that employed numerous different strategies to earn active returns or alpha for their investors. These funds tend to charge very high fees, and the reason for this is to limit the people who can use them. That's really meant for the rich of the rich, so it's something to keep in mind. Then we have something like a bond, and bonds are basically loans, so let's keep that in mind when we hear bonds. And then we have stock, and a stock is a single share of a company or a share of company. So again, I might cover topics that you may already know about, and you may want to refresh yourself on some of this stuff, but I highly suggest that you ask me if something, and before you go ahead and ask me, I want you to be able to research this stuff beforehand. The reason why I want you to go ahead and get comfortable with researching this is because, again, if I had to do an educated guess on this, I'll say about 90% of what self-brokers do is research. It's like lawyers in fewer positions, like doctors, lawyers, and stuff like that, where it's mostly research. It's less about what you actually see as a client or what they show on TV. Like, for example, with something like House, the TV show, the medical TV show, or some lawyer TV show, you might see all the time where they're in the court battle or have some drama scenario. Reality, it's all research. That's most of the job right there. Just like this, it's about using your brain to research this stuff. So you need to be comfortable with doing that, but if you're hitting dead ends all around, feel free to ask me, and I'll try to get back to you as quickly as possible on that. But you need to be in a habit of that. Also, it's also very important to note good information versus bad information. So, for example, you need to know, I'm not going to name names of companies to legal, but you might know that there's right-wing type of news and left-wing type of news. And you need to note that they only show for their objective on both sides. So you need to be able to grab of both sides, figure out the extremes or stuff that doesn't matter, or for the most part, find what is not true at all and find what the middle ground is. Because the thing is with a lot of things, these old saying is two sides of the story, that type of thing. And with this, you might hear something about something with a blue jean. Lately, a store, a high-end store, I think it's Nordstrom or something like that. They pushed out a blue jean that had dirt all over it, and they're selling it for $400. A lot of people, YouTube, news, and other places, they were railing hard against the store that was selling it and the manufacturer. But here's the thing. I think it was actually a marketing ploy. And when you start getting the mindset of, here's what's being said to you, is this true or not? Or is this the entire story? Is there some underlining hidden stuff here? When you start getting that mindset, you start taking a look, hold on a second, it actually might be worth, if this is a public company, it might be worth taking a look at their stock to seeing if it's going to go up. Because the fact is no one's going to really buy a $400 blue jeans, good or bad. But this is great advertisements. Good or bad is great advertisements. They can say, oh, we made a mistake, sold it too high, or just getting rid of it altogether. But everybody's talking about them. So that means people are going to start checking out their store. More people buying it, stuff like that. So how can you capital on it? How can you go ahead and actually make money off of it? See if they are openly traded. If they are, then maybe take a look into it and how much, and if you can afford it. So with that being said, you just need to know about research on an in-depth level, just like many other professions. That's just what you gotta do. If you can't do that, and if you have a hard time with research into itself, then this might not be for you.